California dreaming. Another city goes belly up as political promises are systematically bankrupting the country. Hello, Market Club members everywhere. Adam Hewison here, co-founder of Market Club with your midday market update for Wednesday, the 11th of July. San Bernardino, a city of 210,000, just filed for Chapter 9 bankruptcy on Tuesday. So what else is new? If we are keeping score, that's 3 cities in as many weeks who have filed for bankruptcy. Stay tuned, as I'm sure there's going to be a lot more coming up in the weeks and months ahead. Remember Denise Rich? Yes, she's the same lady who was married to Mark Rich, who was once a tax fugitive from the United States. She's the one who also donated a boatload of money to President Clinton, who then pardoned her ex-husband. It's funny how that works. Well, she just renounced her American citizenship. She said it was for family reasons, but we all know it's purely to avoid taxes. If we keep banging on the wealthy folks in America, pretty soon we won't have anyone left to support the politicians. Lastly, Prime Minister Rojoy of Spain, who made all kinds of political promises to get elected, is having to swallow the bitter pill of reality, as austerity programs are being demanded by the rest of the gang of 17 who make up the Eurozone. We have 2 words for Prime Minister Rojoy. Peseta, anyone? Okay, let's get started. Here we are on my homepage, and we're going to go to our portfolio manager because we've got lots of stocks to cover. Plus, we've got one stock we want to share with you, which I think you'll find interesting. We're going to be looking at let's just go here, go here, and for some reason, I don't see, oh, there it is at the very bottom for some reason. Let's just move that up. You can move your portfolios around very easily just with grabbing them and dragging them. It's what's so great about this program. But anyway, we're going to be looking at several different markets. We're going to be looking at the grain markets that have had a very interesting day so far, and some other markets also. So let's go right to the board and take a look at the S&P 500 cash. As you can see, we've recovered slightly. I expected a quiet day. The real question is, and this is what I want looking at before, is if you put a close only chart in and we draw a trend line with our tool right here, just click on the bottom, drag that up. You can see yesterday we stopped right at that 1340 level. That's a key level. Now we may bounce up. If we do bounce up, I think it'll just be short covering, because I think eventually we're going to break this line and go much lower. Based on our long-term monthly trade triangles, which are still negative, we expect that this market will be under pressure. And obviously the one conflicting is the 1334 level on the weekly, and that's it from 55. This gives us a 55 reading. So it's sort of somewhat mixed. So let's just go to, you can see that trend line really just stopped yesterday right here. The price stopped right at the trend line. We need to close below this trend line. I think a close below the 1339, 1338 level would do it. So let's see how that plays out. We're going to go to our next market now. And the next market we're looking at is the crude oil. Now, crude oil is beginning to try to base out. I'm not sure it's there yet. Let's just put a candlestick chart in. But you can see our weekly candlestick charts are pretty cool in terms of monthly down, weekly up, daily down. So let's just get rid of this one thing that we have on the screen, and you can see we've just been going back and forth for the last 6 days, 5 days, and with really no trend. The 84 level is definitely going to be the key here on the downside, and I think that's what I'm looking at. So if we see a close right below these levels right here, yeah, how do you like that black pen today? So if we close below that level, I think we'll see more downside pressure. Certainly we've got the monthly is down like that, the weekly is up, and the daily is down. So you've got this trade score of 55, which really doesn't lend itself either way to anything right now. So we're sort of like stuck in the middle, so to speak, and that's why we've got this 55 score, and we know that is a trading range, and I think that's the key thing to look at. That's a D, obviously, and let's just see how that plays out for the rest of the week. But generally speaking, we do have a mixed bag in the triangles, which means a trading range. So let's see how that works out. So let's close that out. And before we do anything else, a quick question for you. And I think this is an important question. I just want to mention this to you. And that is, personal one-on-one Market Club coaching. Is it right for you? I'm sure you've seen these before, but have you called us? The question is, have you called for a free consultation? The call is free and the consultation is free. You'd be amazed at how it can help you. So give us a call, 877-219-1482. So let's get back to the charts and the markets. And we're going to be looking at our next market. That's going to be the Dow Jones. And as you can see, we're still negative on the day there. This is going to be our 5th day down in a row. Now, unlike the S&P 500, now I just want to put this in a close-only chart. If I draw a trend line in here, and I can do it very easily, is just grab that. You can see we've actually broken here to the downside. So the Dow is not looking that good. Every time you popped out of the Donchian trade channel, you've come back in. This level here, the 12,500 level, is going to be very, very good support. If we break through that, then we're going to go lower. It's just as simple as that. But generally speaking, the trends are mixed. We've got a minus 75, but we're just emerging into a downtrend. That's partly because of this level here. So let's see how that plays out. Next market, silver. Silver is really becoming boring. I mean, I hate to say that, but the reality is we have a minus 90, which is a strong downtrend. You can see that quite clearly. And if you look at the candlestick charts, you sort of gone down and gone up, gone down. Really, for the past 20 days, you've sort of gone nowhere. And I think the bulls, generally speaking, have been very disappointed in this market. And we're now getting to a situation where we've gone from an oversold condition to we're getting in sort of a little midpoint, but not quite there yet, into an overbought condition. So let's see how that plays out in the market. So let's go to our next market. So generally speaking, the trend in silver is still down, expected to stay down. This is the euro, which just blipped up a little bit a few minutes ago. It's 22.53. The low today we've seen there is 22.30. 122.30. So it's had like a 20 pip rally. Nothing dramatic. I think any kind of rally in here is going to be a short covering rally and not new buying. I think the euro is just going to be slowly dying, a death by 1,000 cuts, if you want to call it that. But generally speaking, I think we're going to see this market somewhat in the red and continuing to erode. We've got a 120, 117 target zone for this market. So let's see how that plays out. On the NASDAQ, again, this is actually coming down under pressure. If we put our closed-only charts, now we haven't closed yet, of course, but we'll have to see how this market closes. If we just go from the lowest point, which is June 4th, right here, on all the equity markets, scope that in, we're right at that point now. So it really has to hold right here if it's going to hold. If we break down, I would not be surprised to see a bounce from these levels, but I think eventually this line will be broken and will go lower and test the 2750 area. So let's see how that works out. We do have a mixed bag, but we're sort of leaning towards, right now at this point in time, we're leaning towards the negative or on the equity markets. So next market's the gold. And gold really hasn't sort of performed particularly well, certainly since, let's say, around the May 12th, May 15th level. It's sort of gone sideways in a very broad range, 1640 to 1540, $100 range. I know it sounds like a lot. It is a lot in my book, but you really haven't gone anywhere. And that's the key thing. If you just look to where we are last week and where we are now, it's really not very much change. But certainly the 1600 level yesterday, the fact that we're below the PSAR, and the fact that we do have support coming in, which is right around the, I would say right around the 1550 area. That's going to be an area that should provide support to this market. So let's see how that plays out. Really nothing to get excited about. All of our trade triangles are negative, meaning the trend is down, and the likelihood of this market going lower is higher than it going higher at this point in time. So let me just rephrase that. There's a greater opportunity for this market to go lower than go higher at this time. So let's go to our next market. Yeah, the next market we're looking at is copper. Copper is much the same way. We're under pressure. It's rallied back, partly reflecting some of the markets, but nonetheless, it still appears to us that the trend longer term in copper is down. Shorter term, it's up, and you can see that's giving us the 55 reading. And of course, when you get a 55 reading, like here, it just means you're in a really an extended trading range. Now, the question is, can we see this market? Can we see this market really, is it building a base? It really is too early to say, but certainly this line right here is a key level. If we were to break over there, we could see some possible further upside action, maybe to the 380 level. I'm not so convinced that's going to happen. I think we're just going to see this chop around for quite some time. And certainly there's no real strong demand for this metal or any metals at this point in time because of the industrial world's contracting and moving into austerity programs. So let's just clear the screen off and let's go to our next market. Next market we're going to be looking at is going to be the Reuters Jefferies CRB index. Now this, remember we talked about this market yesterday. We had a strong day on Monday. Boom, that was the grains primarily following through from Friday. Tuesday, a strong down day. Today we had an up day and we're sort of coming back down. So it's sort of beginning to get that feel like it wants to turn. But certainly the level to look at, in my mind, is 287.50. If we close below that, or touch that level, it's going to send this market on a somewhat of a negative mode, and that would fit into our longer term monthly trade trends, which are still short from 305.38. So looking at the grains, and I think this is what I want to share with you today because this could be a real psychological play. This action in corn is not good, and let's scope that in really closely so you get an idea of what we're doing. So here we are. We have been in a pretty much an upside tear in this market. You can see the levels. That's the monthly kicked in right here at 575. It's still 708. I mean, it's still a lot higher. And the weekly kicked in at 544. We've gone steadily up. This is a daily chart. So we've gone steadily higher, but this day really stands out. The fact that we made a new high, which is right here. There was no holding the market. It came right back down. It's actually at its lowest level in 3 days. We closed last Friday right here. And that's right around, I want to say right just below the, in fact, I'll tell you what it is. Let me clear the screen off and I'll tell you exactly what it is. It closed last Friday at 713.75. It's actually lower than last Friday. If we get more momentum, there's the PSAR, these little dots we've shown on the screen that come in today at 696, which is a little bit lower today, about 10-12 cents lower than we are right now. If we hit that level, then I think you're going to see a lot more profit taking. A lot of people made a lot of money in corn, those who are long, ourselves included, but that level is hit, you'll see a lot of people coming out of this market and taking some profits and waiting to see exactly what happens. So something to watch very closely today. That's going to affect the Reuters Jefferies CRB index we talk about. So let's go to our next market. Next market's going to be wheat. Same thing, same pattern here. You notice how the wheat is a little bit different. Hasn't been quite so strong. It has been strong, of course, but not quite as strong as the corn. And you're beginning to sort of like roll over here a little bit. You had a lot of resistance that looks around, I would say probably around the 860 level. And that's sort of keeps turning the market down. But see how close we are to this little PSAR. If we hit that level, I think we're going to see a lot more profit taking coming in. So let's clear the screen off, go to our next market, and that's going to be the soybean market. And moving right along, so there's the soybeans coming up. This is November soybeans, and much the same pattern there. You sort of moved up, you push back, you try it again today, no luck, boom, you're down. I would say the 15-20 level is going to be a very key level. If you go below that, that'll be a 4-day low in this market, and I think that would bring in selling pressures. We may not see it today, but maybe tomorrow. So let's see how this plays out. But the grains look a little more vulnerable as they did a few days ago. So let's go to our next market. This is an interesting stock. This is called Pandora. You may have heard it's a Pandora Media, and they basically stream music to iPhones, iPads, and so forth. This pattern looks a little bit negative to me, and I want to share with you why I'm saying that. So let's go to 1 year. A year to date, and here's the situation. We had a weekly negative signal right here at $10. It's $9.98, so it's practically the same price. We had a monthly at $9.62, which is back here. And if you take this over here and I put my Fibonacci on here and draw this down, you'll see where we are. You can see we just basically came right back to that 61.8% retracement, failed. We're coming down. I think if you look at this on a longer term basis, let's just go to weekly charts. If you look at this on a longer term basis, it looks to me that we're seeing this market really kind of just, let me just take this off the screen. you can see how it's every time it moves, it's actually moving lower. So that's why I'm saying sometimes when you look at the bigger picture, so here's a high, here's a low, and we keep going lower on these lows. And if we're right, so there's a low there, there's a low here, lower here. If we're right, we're looking for $5 to $6. That's a target zone for Pandora. And the reason we say that, here's the idea. The monthly's down right here, the weekly's down, and the daily, not so important, but you have a -9, so the trend is down. And clearly, if you've just seen the PSAR on the weekly go there, so that's down. If we close, I would say probably, let's clear the screen, go back to our daily charts. And how we do that is right here. So let's just click on that and take our daily charts. And let's scope this into a couple of months and see. So I would say probably if we can close it, the lowest close we've seen, that close is 991. This close is 990. And this close is 984. I would say if we close below 980, I think you want to be short this market. I think we'll see a move down. And look at the reason I say that is because you've got the sort of pivot point action going on here. You've got a high here and a high here, and a lows here, these two lows. So if you go below these lows, which is kind of right about there, I think you've got the target zone is going to be, as I say, the $5 to $6. Now coming from this level, you have the opportunity of maybe making $3, $3.50, which is a really good return on a $9 stock, $10 stock. So it's almost a 30% return, and I think it's going to happen, if it does happen, pretty quickly. So that's something definitely to watch with Pandora. So let's just clear the screen, go to our portfolio. I think this may be the last stock we have. Yep. We also have Netflix. Netflix is a big mover on the upside today, but I'm going to show you something I was looking at earlier. So let's just scope this into 6 months. And we're running a little longer today, but I want to share this with you. So let's just put our candlestick charts in. And if we scope this out, I'm going to put the Fibonacci in from this level right here, which is the last high. And you can see we've hit a 50% retracement, which is ordinarily going to be a problem. But I would say anywhere between the $85 and $90, that's probably a short. Okay, and the reason I say that is this is what I'm looking at. The monthly is still down. Okay, so your risk is not that great. You're trading with a major trend, and it looks as though this market's stepping its way down. And I think this 90 level is a 61.8% retracement. So selling it there, you're risky. You could just maybe put a very tight stop on, maybe a 2 or 3% stop, and I think you'd be in good shape. So let's see how that plays out. But let's watch Pandora as well as the other Netflix as well as Pandora and see how they play out. And let's pay particularly close attention to the grain markets, which could be a big swinger. So let's clear the screen one more time and take a look at what we're talking about, and that is our one-on-one Market Club coaching. So give us a call. It's a free consultation, 877-219-1482. Hey, I'm Adam Hewison for Market Club. I'll see you tomorrow, same time, same place. Thanks for stopping by, and every success in the market.